This is Chris from thetraderguy.com taking a look at a very simple trading system. And this is a variation of a breakout system of a daily range. There's a lot of these around the world, but I want to show you how it can work and how you can, quite frankly, make it a little bit more robust than just simply buying on a move above the high of the previous day. In front of you, I have an hourly chart actually, and this is pound yen, and you can see I've gone through and marked with lavender the highs of each 24 hours and this kind of pinkish salmon color the lows. And each one of these period separators here makes one day, so this is what happened this day, and so on. You can see that was the high and that was the low. So the next day, that was the low and that was the high and low, etc. Now, a simple way to trade this would be to simply buy on a break of the high during the follow session of the previous session, or sell on a break of the low, which would have been down here. Now, in this particular case, you would have gone long. Now, that brings the first question. How do you decide to go long? Do you go long right at the breakout, or do you go long on the close of a candle above there, in this case, an hourly? Neither way is wrong. It's just that if you get a close of a candle above that area, it tends to be a little bit more reliable. So let's say we went long there. Okay, the next obvious question is, where do you put your stop loss? You don't know that this is the low of the day, but we do know this is the low of the day of the previous session that got us triggered. We were essentially waiting for the market to break out of this range, and it did. So the stop loss would go a couple ticks below that. It looks big, but on this chart, remember it's only an hourly chart, and it's pound yen, so it's like 80 pips or something, roughly. And in pound yen, that's really not that big of a deal. So we rallied, we made a high for the day, and we finished the day here. As we move into this period, this becomes the new low. So that's basically where your stop loss would go, maybe a pip or two below. So you've already taken a little bit of risk off the table. Not much, but a little bit. And you can see that we fell over and then shot straight through the roof. That's a very positive sign. With that being the case, the 24 hours roll over. This becomes the high. That becomes the low. And your stop loss is there. You're still able to lose money at this point, but you're trying to give the trade enough room to move. Now, at this point in time, you're risking, which looks to be roughly about 60 pips. Again, not too bad, considering it is pound yen. So we pull back, we make a low here, and we rise there. Well, now your low is moved up here, and you are now in profit. No matter what happens at this point, you're going to make a little bit of profit. We break higher. We kind of drift sideways here and then shoot higher again. Then you move your stop loss up to here, and now that's your profit. We make a high, we pull back here, we bounce to there, the low becomes here, and now that is your profit. And that is roughly, just kind of eyeballing it here, about 200 pips. The next day comes in and we break through our stop loss. Okay, so we're out. So that trade was obviously very profitable. Now that we have broken through this, you could make the argument to start selling. I don't like systems that always have you in the market though, but based upon the very minimal rules that we have, that is a sell signal. This is also the high of the day. That's why there's a box here, because we just fell straight through there. So you could sell. Again though, I don't like selling on the close of the candle here, but unfortunately that's the way the rules play out that I've detailed so far. But I will add to this, and I'll show you why. It does help to have at least one filter, and in a sense waiting for the candle to close is one filter, but it's not a bad idea to have something decide whether or not you take the signal. So we've fallen pretty significantly. We've made a low during this day. The high is here, so the stop loss is up here. We pull back and then we fall. Okay, so the high is here. The entry is here. The market is here. We rally and we get stopped out for a small loss. Now, over the last couple of days, and this day isn't quite done, but it almost is, we've made a significant bottom where 3 days in a row it's going to be the bottom. A breakdown below there, I have a lot more confidence in. So looking at this trade environment, we lost about 60 pips, gained about 200 over the course of 2 weeks. It's profitable over a longer term. It's a trend following environment, though. Obviously, you need the market moving to have this happen. And that's the first thing you need to be aware of. So let's add another filter. I'm going to add a very simple filter, a moving average, and I chose 72, and the reason I did is because it's an hourly chart. That's 3 days worth of information. So looking at this, you could take the same trade. You would have taken the same trade, and the reason for that is the moving average is sloped up. So obviously you're looking for a buying opportunity. When we broke down through this, the moving average was still sloped up, so it goes against the longer term momentum of the last 3 days. You could use that filter to stay out of that trouble. Now the filter points down again, and if we break down below here, I have much more confidence, not only because of the moving average, but the fact that 3 days in a row, buyers have come in at about 145.75 to try to lift this market. Very simple system, but it does work. And that's the thing. You have to let it do its job. Most traders do not have the patience to look every 24 hours and go, oh, I'm still in the market. Time to move the stop loss up maybe 20 pips, or in this case, much more. So play around with it. Demo test this. If it works for you longer term, it takes a lot of stress out of the markets. Mechanical trading is a huge way to go because it takes a lot of the questions out of it. You just do what the system says, and you go from there. Now, you'll notice that I said 200 pips was the winning trade, not 5% or whatever, because that comes down to money management. It's an entirely different argument and question. You know, for me personally, this trade here where I had this as a stop loss and that as the entry, that would have been worth about probably 1, maybe 1.5% of my count at the most. So really, by the time I get knocked out up here, it's a gain of about 3 or 4%. You only have to do that a few times to beat money managers who basically make about 10 to 12% a year on average. That doesn't mean that you're going to. That doesn't mean that every trade is going to work out. But you can see a simple mechanical system like this works really well because you're letting the market dictate where you go. I hope this has been helpful. I plan on doing a couple of simple system type setups like this just to give you an idea of some of the things that you can do.